Alex, how are you?
Hey, good, Yaman. How are you?
I'm good. How you feeling today?
Pretty good. Numbers are up.
You mean the stock price? Yoda,
Yeah,
how
yeah.
are you?
Doing well. Yeah, how's it going?
Going well. You must be feeling good. So, how many shares do you have now?
Of which one? Tesla?
Tesla.
Well, I had 14,200 going into the shareholders meeting. And I physically bought, I think, 69 in Giga Texas. So now the count is 14,269.
That's awesome. Well, are you looking to add more? Would you buy more here?
I think pretty maxed out at this point. So I've got kind of the 3 to 5 year living expense covered by TSMC, Apple, Nvidia. Um, and actually, the interesting thing is I could shift those into Tesla, but I know once they're in there, I'm not selling. And so, in fact, what I'm trying to do is to hold on uh, to just that much Tesla and then leave the rest for kind of living expenses for the next few years. Well, in addition to like income.
All right, that's awesome. Good luck with all of that plan. Omar, how are you?
Hey, doing good.
How you feeling about this price action?
Yeah, I think the market is kind of unpredictable, but the thing with Tesla is you never know when the train's gonna leave the station, and you wanna make sure you're on the train just in case it leaves.
Okay, good.
Rocket
Yeah.
or train?
Um, we have a new speaker named Mo. Mo, go ahead. Can you guys hear Mo? Okay. So Yoda, we're on a rocket, not a train, as you mentioned. Where do you think we go from here? Do you think this? First of all, do you believe that this is a gamma squeeze, or do you think this is fundamentally driven?
I think a lot of the well, okay, I think I try not to think about the share price. So we could talk about that, but I think where this is going is assuming that August 8th isn't a total flop, which, judging by Elon's latest uh, performances, I guess at the shareholders meeting as well as on X, um, I don't think the chances for a flop exist. So based on that, I think we are heading to 300 shortly after the August 8th event.
Omar,
And
what do you think? Sorry,
oh,
Yoda,
sorry,
go ahead. Finish your thought.
yeah, and the price action, I think is primarily driven by uh, investors, institution, PMs, retail, realizing that Tesla is an AI company. So we're just on that transition right now.
Omar, what do you think?
Well, I don't think 8.8 is a performance. It's not about the show. It's not about whether people like it or not. I mean, this is a new product unveil they have. This is really their most disruptive product ever. So I'm interested to see what the product looks like. I think it's going to be something they produce millions of. But, really, I think the story for the stock, when you just sort of look at the basic things that matter to people, because yes, the AI theme kind of underpins the valuation, right? When you're talking about a company that's worth 700, $800, there has to be something to justify that kind of valuation long term. But at the same time, the basic drivers of earnings do matter in the sense that when you're looking at when to buy, you don't necessarily want to buy when things don't look good and the stock is going to fall. So I think a lot of the tough comps when you look at, for example, Q3 in 2023, they had some factory downtime or something like that, and they only delivered 435,000 units. So just looking at their Q2 numbers, they already delivered 443,000 units. So looking ahead, seems like we got a record Q3 in the bag. Last Q3 was a record. We're already ahead of that. So that's an easy beat coming up, right? So you don't have that sort of negative cloud over the next 3 months um, until, those earnings come out. And, in particular, I think the most telling number on the production and deliveries number is the production. They produced only 410,000 units. Now, we know that they could produce easily 500,000 units in a quarter if they had all the factories running as fast as they could go. So, the number one producer of EVs in the world, but at the same time, they are producing far less than they could. They have a lot of unused capacity there. But I think the sort of strategy that Elon had been telegraphing previous to this had been a scary one for Wall Street, which is, hey, we actually want to prioritize volume, keeping the factories running as much as possible, and we're willing to actually sacrifice pricing and margin to actually move higher volumes of cars, even if the environment is tough. And that, of course, led to some sales growth. We had more deliveries last year than we did this year with this strategy of volume, but it was obviously devastating to the share price margins. Fleets like Hertz, they saw declines in resale value. So, it could be a number of explanations. Usually Tesla gives some commentary on the production and deliveries. They were a little bit light in this note on some of that commentary. But I think that number speaks volumes, and it's really saying, look, we've got a new CFO, and we are going to actually start prioritizing the business over volumes. There's obviously going to be a working capital benefit here. They're delivering more cars than they're producing. But more than that, they're saying, look, we're going to actually prioritize price stability, earnings over volume. And you didn't see as many sort of, massive price cuts. They've kind of gotten to the end of that now. Now you're seeing them offer much more tailored sales incentives, such as financing incentives that can be, really tailored around a specific time when they need orders or something like that. So I think really, we can talk about AI and robots, whatever. Oh my God, robots are going to be so great. But ultimately, when you're buying a stock, you are looking at what is sort of the earnings backdrop here. And I think management has signaled through the production number, especially, that they may be moving into a new period where they're going to try a different strategy. So you look at that combined with the layoffs they've done, and I think it could be a lot more positive on some of these earnings releases than what we've been seeing over the last few quarters.
Okay. Thank you very much for all that. We can speak about a number of things. Can you guys hear me all right? Okay, Magic, go ahead.
Hey, so just rebuttaling off what Omar just said. So financing deals are price cuts. They're a form of a price cut, but they are price cuts. So they're extending the financing deals. So they need to offer incentives to move metal. Production cuts aren't bullish for growth companies. So that's not a good sign that they're cutting production. Price cuts continue, and also deliveries are down year over year. So production's down, you're cutting prices, and still deliveries are down year over year.
Now let me ask you something. You and I have a bet, right, that Tesla's cash balance will drop below $10 billion, you said, and I said it won't. Do you still believe so after yesterday's results, where deliveries came in materially above production figures?
So the thing is, yes, I still believe that's the case. And I'm just saying decreasing production is not bullish for a growth company.
No, I understand. But so you still think Tesla's cash balance will drop below 10 billion despite the deliveries coming in materially higher than production, which means cash flow positive, right? Because they produced some of the cars in Q1 and they're going to be delivered, they were delivered in Q2. And then on top of that, Tesla's energy production showed a really huge surge, which is a high margin. I mean, even higher margin than automotive business. We have Bradford in the audience if he wants to come up and talk about some energy discussion. I would appreciate that. So, Magic, I think at this point, you have to kind of admit at a minimum that Tesla surprised cash flow wise in Q2 for you to kind of retain any sort of credibility, don't you think?
Yeah, I mean, look, they moved. If the delivery numbers are correct, then they did move more metal than I think consensus was, right? But again, at what price? How many price cuts did it take, right? And deliveries are still down year over year. So next year, if they want to increase deliveries, how many more price cuts can they afford to take? That's the thing.
Okay.
Is that you're pulling a lever.
I got you. Listen, I'm not as patient as some of the other hosts. So if you want to go on for hours and hours about FUD and nonsense, go to Adrian's space. I want to talk about energy. Bradford, how are you? Bradford can't hear. Don, go ahead.
I can be wrong here, but I don't think that cheaper financing is apples to apples with price cuts, especially with the way that it turns out on a balance sheet. Whenever you're selling a car, let's say you have the Model Y that you say, okay, a price cut of $2,500 versus you're actually selling the car for, let's say, $37,000 and you're just offering cheaper financing. When it comes out on your balance sheet in terms of inventory sold, I think that the number that's being listed as your revenue is the full price. So I don't think that it's necessarily apples to apples. And if anything, I think on a macro level, doing that is actually a much better idea than price cuts because you don't understand how interest rates affect the economy as a whole. You think that, oh yeah, just inflation, but most things become more expensive because of financing costs. And you may not know it, but you're probably not buying a bunch of things because of the financing cost that's associated with buying that product from your consumer. So your consumer is probably driving up the price because of the financing costs. So I don't know. I just completely disagree with that point. I could be wrong, but I don't know. I just wanted to say that.
Omar?
Yeah, so a sales incentive is like a discount, right? So, I mean, this is pretty typical in auto retailing when you really get into volume. A price cut is, across the board. Everyone who buys a car, whether they buy it or they lease it or whatever, the price is less. These sales incentives that they offer, hey, okay, free supercharging, free FSD transfer, lower interest rate promotion. These are sort of discounts that they give on a case by case basis. within a specific time period where they want to get orders and so on and so forth. So it's a bit more targeted than a price cut. And I think Wall Street's looking at that strategy and they're liking some of the new thinking here compared to what we've seen over the last year.
Okay, great. There's a lot of discussion around Tesla Energy margins. I tried to bring up Bradford, but I think Bradford is having issues, connection or mic issues. When Larry or Matt comes in, we can talk about Tesla Energy margins. Let's see if anybody on the speaker board or in listener mode follow Energy closely. They've analyzed production, margins, cost, Megapacks. If you have, please request to speak. I would love to talk more about Energy. In the meantime, Omar, what do you think about Pelosi selling her shares? A lot of people followed Pelosi to the letter. Looks like she sold all her shares, right? Tesla shares.
Well, she is the greatest trader in the world, so maybe there's some value to that. I think ARK sold some shares as well, but I'm just gonna hold even if it goes down. I mean, I can't tell you how many times I've regretted selling too early in different stocks, and I think we're just kind of getting started here. So I think the stock has run up a lot, but at the same time, when you look at what they're doing with FSD, I mean, if you check out some of the city streets driving that it's doing in San Francisco, I was just kind of blown away by how natural it is. Completely zero intervention, complex urban environments, pedestrians, everything, and it just handled it like it was a human.
Okay. We can talk some about FSD. Does anyone else on the board have a view on Energy or Pelosi selling shares? Yoda?
I could care the F what she does. I'm able to test FSD, and so that's the most important data point that I'm looking at with the Tesla investment. To me, this is the biggest information arbitrage of the decade. Um, there is a very limited percentage of population in the US that has access to this information. I think Tesla's penetration in the US is about 4% last year, 4.2% actually. And let's say 10% of the owners have access to FSD or studies it religiously. And so you're looking at less than 0.5% of people in the US that have access to this information arbitrage.
Magic, do you have a view on Energy?
Immaterial.
You think $1 billion of gross profits are immaterial in one quarter?
I don't think this is a low margin business. It's like selling bananas at Walmart. It's very low margin. So it doesn't really, even if you do have a lot of volume, look at the stock price. It's already priced in 10 times over. It doesn't matter.
What do you think is the value of Tesla Energy? Present value or future cash flow today?
Nominal. I haven't even looked at it. Nominal.
Yeah, I can't tell you haven't looked at it. Dan Stutar, go ahead.
Yeah. So I don't know that much about Tesla's the detail on their energy, but I can tell you that I buy batteries direct from China, and nearly all of the big OEMs are doing container-sized batteries. But I'd say the main advantage for Tesla is software and understanding of grid grid level requirements. So I think, yeah, a lot of people underestimate auto bidder, and in general, I think it's the software aspect that people just don't get it.
Okay, thank you.
Tesla's so far ahead.
Shiva, go ahead.
Hey, hey Omar, hey Yaman. Yeah, I just wanted to talk about FSD real quick. I've been driving FSD for the last probably 2 weeks straight. I drove from Toronto to Texas to Austin to Tampa, Florida, and now I'm driving to Seattle, and it's been a lifesaver. Like, it's unbelievable. I'm on 12.3.6, and without this, it would have been torturous to drive this much. And yeah, I'm very happy with the future of FSD. I invested, and as far as energy goes, I would say there is quite a bit of competition from like Anchor, but they're also not scaling correctly. So competition-wise, I think Tesla has a scale advantage for sure. They have the supply. Yeah, that's pretty much it.
Yeah, Tesla energy is a topic that not a lot of people actually analyze. And I haven't really seen, we talked about it a few times here. I think Machine does a good job of kind of focusing on the longer term. Matt came in a couple of times. He's very technically aligned with the topic. Larry appears to be very, very excited about it. I watched Larry's interview with Matt on Herbert this morning. Recommend people watch it. And they appear to be kind of divided down the middle, especially on margins. The topic of energy, Megapack, longer term margins. Omar, Magic pointed out it's generally a low margin business. Some people say there's a lot. Shiva just mentioned that there's a lot of competition. A lot of companies produce Megapacks. What are your thoughts on the longer term potential of Megapacks specifically?
Well, you can think about Tesla as sort of this company that takes batteries from suppliers and a small amount they make themselves, and they turn them into products. So one of the products is the car. One of the products is a stationary battery you can plug into your home. And one of them is a larger scale stationary battery that is designed to be stackable endlessly. You can put a ton of them and create a battery of pretty much any size just by stacking these mega packs. So just right off the bat, I think you get a lot of scale in the battery industry from these utility storage projects. You get a lot of the same technology. You're able to apply it over a lot of the power control units, inverters, everything that they're using in their business. There's also a lot of crossover. Obviously, they're sort of building superchargers. They're using Megapacks. They're using them within their own business. They're using them to help power the Tesla semi chargers. But really, when we think about the opportunity for Megapacks, it's kind of how many batteries do we need to power the world? Like, what's the global market for batteries? And it's really a much, much larger number than most people are thinking of. When you talk about a future where the vast majority of energy is renewable, batteries are going to be a key part of the infrastructure. And I think demand for power is going to grow much faster than most people are forecasting. So, really, the battery cells themselves, I think, are just going to be driven down in price over time. The battery systems will be driven down in price over time. The key value driver is really going to be orchestrating these systems and creating solutions that can actually serve the needs of utilities and municipalities and tie it all together in a way that makes sense.
Would you like to put a number on? So the answer to the question at the top, Tesla Energy, what's it worth today? So, there are different ways you can value a business as a standalone business. If Tesla Energy spun out today, that produces Powerwall, Megapacks. I mean, most of the value is coming from Megapacks right now. And it's probably going to be the case in the near future. Whether you want to do an estimate of ASP times sales times gross margin, some operating expenses, and a P multiple, anything of that sort, or a DCF. If anyone has done the calculation or want to kind of take a swing at it, please reply to the tweet at the top. Tesla Energy, what's the worth today? I'm curious. Omar, would you like to put a number on it? Machine, for example, yesterday said he's sticking with his $100 billion estimate. Magic says pretty much zero. There's wider dispersion of estimates on this topic.
Yeah, I think it could be worth 50 to $100 billion today.
$50 to $100 billion. Okay. Yoda, what do you think? Would you like to put a number on it?
Yeah, I think Master Plan 3 has a lot of detail and maybe things that the analysts can apply math to that. But Elon said that energy business will be equal to the vehicle business. And so that's probably quite telling. Right now, in terms of the full potential of that business, we're maybe at the first innings. Be curious, Omar, when you look at the current quarter spike in revenue, sorry, not revenue, but when you're looking at
Deployments.
this deployment, yeah, the spike, do you think that is a one-time event, or potentially we're maybe seeing uh, a sort of an H100 scenario whereby they've unlocked the ability to produce something that then the utilities realize they need to transform, uh, their systems, and that will be sustained.
We need a lot of these things, like a lot. And as the price comes down, people demand much more of them, right? So if the price goes down by, let's say, 50%, well, good, let's buy twice as many now because our budget is still the same, right? And we would love to have as much as we can get. So we're going to need to produce a lot of grid battery packs. And it's really going to be the key to enabling the really low cost renewable power generation that we have to actually be fully useful, to be able to use it at night, for example, or to match supply and demand. So you look at all these trends, electrification, the rise of AI, all this stuff, it's going to get crazy. Now, you just look at sort of Tesla side from the production side, they have their Lathrop factory up. They were before making it in Giga Nevada. Lathrop enabled much higher volumes. That's what's really enabling this revenue growth. But there's a long lead time. You have to get Lathrop up and running. It has to ramp to volume. Then you have to actually have it installed. And then maybe 12 months later, you're now seeing those deployments flow down to the bottom line. So similarly, we're seeing seeds being planted for future revenue growth. Obviously, Lathrop is continuing to ramp. It'll reach its full capacity of 40 gigawatt hours, which, it looks like it's getting pretty close now. Although it should be a little bit higher than 10, because I think you have Nevada and also Lathrop. Then, of course, you're going to have the Shanghai Gigafactory. the mega factory that's going to come up and running there. And I expect that once it's ramped, it'll account for more than 50% of the Megapack volume. With China's battery supply chain, which is way lower cost than in the United States, and all the suppliers are right there, I expect that a Megapack produced in Shanghai should be significantly cheaper than a than a US made Megapack. Uh, so you can sell it for a lower price. That unlocks additional demand. You also have the unlock of locality, which is it's actually easier to ship from Shanghai to pretty much anywhere than from California to pretty much anywhere. So I think that's going to unlock additional demand as well. And all this is adding up to a situation where I think energy storage deployments are going to continue to grow quite aggressively. So we haven't really even seen things get started yet. I mean, the Shanghai mega factory is still under construction, not up and running. And the thing that I like about these mega factories is they're way simpler than car factories. You don't need a ton of complex tooling. You don't need a lot of the stuff the car factory has. It's really pretty simple. You just put the cells in an enclosure, you put some power electronics in there, and boom. So you could actually build a lot more mega factories, have them local to where that demand is. Build one in, you know, any part of the world really, where it's convenient, and serve that local market with a mega factory with much less capital required than building a full scale auto gigafactory.
So
Yeah, that's
Bradford, sorry, the Bradford can't come up because he has connection issues, but he replied to one of the tweets at the top. He says, given that prices have come down intermediate term, Lathrop plus Shanghai may generate $20 billion in revenues combined at 40 gigawatt hour each. At 20% margins, that's $4 billion with a 40x multiple of $160 billion. I would actually take the over on the margins. So yeah, 20 billion later than Shanghai and a 40x multiple. Interesting. But then he asks, what are the true capacities? How many other mega factories will there be? Let's go to Shiva and then Yoda.
Hey, yeah. So just following up on that, like even if you take the 9 gigawatt hours and you annualize it and you put a 50% margin on it and a 40 PE, you get around like 75 billion. And that's super conservative, right? And seeing the growth of the factory and Lathrop and how they're basically productizing this, like I actually see Tesla as a utility in the future. Because why wouldn't they have those conversations with municipalities and counties? Like they're already good at that, and I think they're just going to get better at that because they have to license FSD as well. So they're going to get to know. Like I really like how Tesla and Elon play their politics. So I think that's just their strength, and they should leverage that. I don't know if we should include that in the model or not, but I definitely see it way higher than 100 billion. Like probably more so. Whoever you referenced to is referencing 150 billion. That's probably the current valuation, and future it could even be higher. So I see Tesla as a utility. Yeah.
Okay. Well, you said 40% margin. I mean, there's nothing conservative about it. You have to mute yourself when you're not talking, Shiva. Thank you. Nothing conservative about the 40% assumption margin assumption. So maybe Magic can walk you down a little bit on that. Also, you apply the 40%, I'm assuming gross margin, and then you apply the PE multiple on it. There's a few steps you kind of skip there. Magic?
Yeah, I don't see it as 40% operating. I mean, I don't even know where that number came from. So I don't. Can anybody provide why you would think that they're going to have 40% margin?
Shiva?
Yeah, like if you look at the standard industry and you look at residential and commercial contracts across brands, it's around like 30 to 40%. So if you take a look at anchor products residentially, and you look at cost per lithium iron phosphate, you can get that number.
All right, Alex, what do you think about this? Where do you think Tesla Energy is headed? We had a huge surge in deployments in Q2. Clearly, there's going to be a step up in revenues, although maybe not to the same degree because of accounting methodologies being used. Maybe it'll take some time for revenue to be reflected on the income statement. But specifically, where do you see margins going in the coming periods?
I think margins are always going to be like much better than on automotive. That's for sure. It's a much simpler thing to build and to deploy than a car. And yeah, I think Elon, well, he's been saying it, I think, since 2018 or 2019, that Tesla Energy was going to be on par with automotive, maybe even bigger. So it's happening now. People didn't believe him back then, and you can see the graph that, you know, it's been slow ramping, and suddenly we have a huge shut up. We'll have to see like what the next quarters, you know, show. But yeah, I think it's catching on. People are seeing the savings, are getting, there's a track record being built by Tesla, and people are operators are seeing that, yeah, it makes sense to deploy these things, and the payback time is like relatively short, so it makes a lot of sense, and they're doing it. And Tesla is basically a leader in that. And also they can also, with 40% margin, it gives you a lot of room to wiggle there to be able to, you know, sell these things and not at full capacity of those two plants in the US and China.
Okay, thank you, Alex. Let me just read what Bradford just typed in as well. He says, the tweet at the top, he says, margins will be higher over the next 4 to 6 quarters as there will be a delay of lower LFP prices flowing through. Okay. Dan?
Yeah, I mean the macro scale is it's hard to know, you know, because it's big numbers, and unless you were part of the Tesla team with insights, I don't know how you would guess that. But I can tell you from the point of view of, I was looking at ordering a Powerwall here in New Zealand. Essentially, that was going to cost me about 15 grand. But doing it myself with getting a high quality inverter, not as good as Tesla's inverter, but in simple software, I'm probably looking at about 5 grand. So here in New Zealand, they potentially could be operating at 70% gross profit on raw materials, to give you an idea. I think there's way more margins than people realize. Yeah.
Grant?
Hey, I've just been listening in. I'm getting packed up for the holiday here. What's up?
Where are you going?
To visit family. I won't say more than that, but it'll be a beach, so I'll take it.
Should we assume all the bears are packing up too? People have been asking about you as the stock price has been going up. Has anyone checked on Grant? How is it feeling right now?
I'm doing okay. I don't know if anyone else was on the call with Adrian Dittman last night. That was an interesting conversation, but I was disappointed that he didn't record it, because it was just kind of a fascinating discussion around a lot of these same topics.
Yeah,
well, it's good to know that Grant continues to focus on what's important as his short position goes up in flames.
Stock's almost up to break even this year, so good on you guys.
Yeah.
The market,
you know, I bet if you crack this Adrian Dittman conspiracy wide open, the stock could probably collapse.
I was going to go back to what matters, which is the stock performance relative to the market this year, but I can understand the desire to deflect there. I'll let you guys get back to it.
Joey.
Is Megapack able to use the auto bidder technology?
Yeah, I don't see why not. Alex, do you know?
Yeah, of course it uses it. That's how they control all the pricing. Of course, it's not the same thing. It's like frequency regulation and everything, but that's where they get the most, and they figure out when they need to fill up and when they need to drain it.
Okay, thank you. Joey, welcome back, by the way. You've been gone for a while.
I know. Thank you.
Do you just come back when the stock is up and then disappear when the stock is down? What is this? You get so mad at me when the stock is down, and then when the stock is back, you're so happy.
Yeah, I was mad
It's not
at.
happening because of me, man. It's not. I don't have any impact on the stock price.
Well, I was mad about the conversation I had with Machine about the market because I don't really care about day to day. So, I mean, I knew eventually this was gonna happen, so I just took a break until it did.
Okay. Magic.
Hey, just wanted to ask a question. Do you guys have any other know of any other time in history that a mega cap is up 30% in 7 days based on almost no news?
Yeah. I mean, Tesla was the other one. Tesla early 2020. It was a mega cap, and it went up. It's quadrupled in a month. So this is nothing compared to that.
So totally organic, fundamental analysis. I guess the market figured out in the last 7 days a lot more value in the company, or is it maybe a gamma squeeze? I mean, who knows?
Yeah, it's a gamma squeeze. I mean, whatever. But this is,
I mean, I don't know
like
if you
Omar
heard,
said, this
but
could just be this could just be a start with things. Who knows, right?
I don't know if you heard, but they released production and deliveries for the second quarter. They started rolling out a new FSD update where they're going hands-free. So there's a lot of things happening at the company, even if you might not have heard about it.
Yeah, and then Omar talked yesterday about a lot of clouds over the stock being lifted. Elon's compensation plan, what have you. So you can count like 10 things. I mean, the stock had gotten really, really negative sentiment, and there's some release of that. Obviously, there's some gamma squeeze as well. I think people are really excited about this energy business. Some people are excited about 8.8, which is upcoming. So there's going to be some positive sentiment around that as well. But who knows? It may continue, it may not continue. Nobody really knows except maybe some people.
So this isn't a concentrated, pretty much bet on short dated call options. Is that not what's happening? Isn't there a lot of short dated call options being traded all at once and coordinated by somebody to push a stock this big up 30%?
Who do you think is that somebody?
It's a whole lot of money. It's a whole lot of money.
You think it's Adrian?
I think it's maybe a charitable foundation in Curacao. Maybe it can be Rebellionaire here, Brad over here, that trains people how to, buy short-term call options. Someone with big pockets is doing it.
Alex, you're a Rebellionaire, right, Alex? Oh no, where's the thing?
I'm not anymore.
You're
No,
not
it's
anymore?
there. No, it's there. It's just sometimes
Oh,
in
okay.
spaces it doesn't show.
Oh, okay. Are you doing it? He just
Yep.
blamed you for a gamma squeeze.
Oh yeah, I'm totally responsible, 100%. Blame me all you want.
There you go, Magic. Maybe Grant is doing it. Grant, are you doing it?
Not me. Can I make a separate comment, or you just
Yeah,
moving
go ahead.
along? Yeah, I mean, I take the comment around the clouds. All I'll point out is that it's just kind of crazy to me. I mean, it's definitely unique that a business with a lot of quote unquote clouds hanging over it with declining revenue and earnings is trading at like 80x, And I mean, it's cool that it's gone up. It's very unique. It is just a very interesting situation here that doesn't have precedent. I totally agree with what Magic's saying. It's a fascinating one. We'll see what happens.
Okay, thank you. Ellie.
Thanks, Yaman. Is there any issue to deploy any of the Megapacks on the ground? Thank you.
Well, whatever issue there was, they clearly overcome some of that this quarter. So, I mean, that's a massive jump quarter to quarter. So Grant,
Well, what do you mean, whatever issue it was, they overcame it? I mean, I hear the comp package is one of the clouds. Are there other issues that they overcame? I mean,
no,
I guess
we're
had a
talking about
good
mega.
deliveries number. Oh, I
You
think
pay
maybe
attention.
no, I think I'm not hearing someone. I'll drop down.
Yeah, Ali asked about basically installation deployment of these mega packs. Yoda just posted a big tweet. Yoda, would you like to talk about it?
Yeah, I think much like this isn't like the perfect analogy, but I think much like how Jensen talks about there's a transformation that's going on in the data centers from CPUs to accelerated computing. There could be this sort of realization in the utilities soon. Maybe we're not there yet, but that they need these battery packs to retain power because the sun doesn't shine 24/7. If and when they realize that both the auto bidder and stationary mega packs will be kind of the required technology that will help them advance. In just looking at the U.S. market, there's around 3,000 electric utilities at the capacity of around 1,200 gigawatt. And you can then sort of break them down into IOUs, public utilities, etc., and see if they're a good fit for megapacks. But I think the market obviously is huge. It's much larger than the current capacity. Uh, so yeah, I think this is a very interesting area for hopefully more of us to follow and study. This, as Elon said, could be as large as the auto market. It's not very sexy, but
Well, but first of all, that last comment that Elon has been making is very vague, right? Is he talking about market cap? Is he talking about revenues? Is he talking about gigawatt hours? I think he clarified once that he was talking about gigawatt hours. Is that not correct?
I thought it was revenue, but it could be gigawatt hours.
I thought it was revenue as well.
Okay. So if it's revenue, then do you think market cap wise is going to be a larger portion than automotive, excluding, let's say, FSD, robotaxi stuff?
I would think it's around 100 billion in market cap right now, or about 12.5% of the share price today. Yeah, it's hard to say. I think again we're too early. This is maybe like the Model S moment that we're looking at. So who knows?
Okay. Okay. Man, it's amazing how underexplored the energy is. It is surprising. Let's talk some FSD. Omar, 12.4.2 rollout appears to have stalled again, right?
I wouldn't say it's stalled. I would expect it to probably start going out this weekend to more people.
Okay. How is it doing for you? I saw a tweet from our favorite Bear on the topic about this miles to disengagement dropping in 12.4.2. Did you see that? What's his face again? I forget his name. The guy who's spending a
I
lot of
didn't
money.
see that, but almost every drive has been zero intervention. It's very smooth, it's very natural, it's hands-free, obviously. I think that it is looking pretty good. They should be just about ready to start sending it wide now. And I think that's going to be really exciting for people.
Yoda.
I think with each successive iteration, one thing that Omar can give us is, would you trade this version for the last version? Or sorry, would you trade the last version for this version? And on that note, yeah, would you rather have this version or 12.3.6?
Well, I would have this version hands down because of the no nag. So I would never want to go back to having the nag after using this, and I think everybody's going to agree. Now, the one complaint that I do have is it sometimes is driving too slow or taking too long. For example, you know, driving under the speed limit. The speed limit's 25. It's driving like, 23 in some cases. It seems to be doing a little better at that on the second day compared to the first day. And new versions are always more cautious. They kind of dial up the cautiousness, and then as it gets validated, they can kind of have it be more sure of itself. So you kind of expect some of that with new versions. It's hard to tell, what's that and what's just, you know, it just overall it feels kind of frustrating sometimes. Like, so imagine you're driving and you're driving like 23 in a 25 and you're driving very slowly up to the traffic light. Then you finally get to the traffic light and the light turns yellow and it slams on the brakes to stop at the yellow light. And, it's just not fun, but it gets there with zero interventions. And I'm hoping that as they sort of get more confidence in the build, they give it more leeway to cross on yellow lights more often, drive a few miles per hour faster, just to overall maintain that really sort of quick feeling that 12.3.6 had, especially as it got more mature. It really, for example, on the yellow lights was striking a very good balance. I remember 12.3.6 also had this issue at first where it was stopping for all the yellow lights, like way too often deciding to stop. Or, maybe that's just kind of my bias as someone who always speeds up for yellow lights. But then as 12.3.6 went on and got rolled out further, it seemed to be striking a pretty good balance with those yellow lights. Crossing when it was appropriate, not braking too hard to stop at the yellow, but still stopping at the yellow when it made sense to do so. And then with 12.4, it kind of is more cautious again. So it could just be them making it more cautious and that's going to sort of resolve itself. But that's really been my major complaint for it is just driving quickly, right? So, I mean, you can easily get interventions down just by being super slow, right? But you need to be low intervention, but also quick.
Maybe just two quick follow-ups. Omar, what setting are you using, like auto speed and
Assertive, auto speed on.
assertive? Okay. And the second thing is, um, I realize it might be helpful if you do a drive that show us your manual drive, so we get like a reference because maybe you are a crazy driver.
If I published that video, it would be incriminating. But I mean, safe is good, but that's just really one thing I really liked about 12.3.6 is it didn't feel frustrating. It actually drove like human. And, honestly, I'll take a few more interventions for a more human like driving experience. That's just me personally. Like I'm there, I'm ready to intervene. So maybe there could be a little bit of a dial on that. But again, it seems to be like they're really kind of grappling with this new paradigm of FSD where they're doing these sort of full model retrains. And a lot of times when you do these full model retrains, a lot of weird sort of unexpected behaviors can pop up. And they really kind of are treading carefully, making sure they're QAing everything, making sure that at first they have very high confidence and only once it gets validated by the fleet and they're not seeing any issues do they really let it, I think, really be itself and do everything it wants to do because it kind of inherently has some bad impulses. So whereas V11 was really good at yellow lights, doing the right thing. the impulse of V12, because it's trained on human data, is just to like run them. So they had to overcompensate for that by showing it tons and tons of videos of people stopping at yellows. And this has gotten it to be like, a little overly cautious. But overall, if it follows the same path as 12.3.6, this is, no doubt going to be the best FSD update yet. And I think it could live up to the 5 to 10x improvement in miles per intervention for most users or more, depending on where you live.
Ellie.
Thanks, Omar. Something I don't understand, and please help me to understand. I watched some of your latest videos, and also you talked about it right here. So in my mind, the way I'm looking at it, we don't want the car to drive as human. So maybe sometimes, maybe in the future, it will be actually a good thing if we will slow down. Obviously, I'm not talking about, slam the brakes on the yellow light and stuff, but by the end of the day, should we expect the software to drive just less, slower, more safely, more safe, and maybe we're not supposed to, it's not supposed to mimic us.
Well, the core of the rideshare market, if you look at the rideshare market, it's not in the middle of Iowa. There's no market for ride sharing there. It's in dense urban areas, places like Manhattan, San Francisco, Chicago, Los Angeles, where it's just pandemonium, right? The rules of the road, the rules of the law, they break down. You go to really the laws of physics. That's really the only guide in what sort of driving behaviors you'll see from people and cars on the road there. So it really needs to be able to drive like a human, be assertive, be confident, be quick. When it gets to a four-way stop, it knows how to negotiate that properly. It does it smoothly. It does it just like a human, no hiccups, right? I mean, you can be super cautious and let everyone go, but you're not achieving that natural sort of driving feel in the city where people are going to want to turn it on, right? So if it is too slow, then people won't turn it on. They'll just drive themselves. Like that's what I found myself doing a lot with 12.4 is okay, let me just drive myself because this thing is going so slow. So I think it's just part of the new model. And you can see that the new model has clearly much better capabilities. It's much better at driving. It handles a lot of situations that the old model struggled with perfectly. But I think they're kind of keeping it in a cage right now. So I'm excited to see what its full potential is. But, you can see from my recent videos, almost every drive now is zero intervention. And in particular, check out the city driving I posted in downtown San Francisco around videos. Almost every drive now is zero intervention, just doing everything it needs to do for urban driving. And this is a hardware 3 model.
James.
Yeah, I just wanted to add, I think that it's important that the cars can drive like the average person also because we're in a position right now, a transitional period where they need to drive with other cars that are driving manually. If we were in a situation where every car was autonomous, then they probably could drive slower, work together, and that would probably be safer. But they need to drive with other manual cars, so they need to be able to drive like them.
Omar, do you think FSD will get to a point where it just learns from its own mistakes rather than human feedback?
I mean, in some ways it is already. Like, for example, they've always had certain triggers. Like, for example, when a detection is flickering, is the car there or isn't it there? That automatically gets sent up. It gets added to the training set with the correct labels, and it can kind of improve. human feedback's obviously critical, but a lot of what it's learning from is just manual driving data, right? So it's just learning from watching us drive manually. And when it has a situation it can't handle, we the solution is, well, let's just show it how humans do that. And we find videos of people across the fleet doing whatever it can't do, and we show it, and then it starts to be able to handle those situations better.
Okay, we have a new speaker coming up. Joe, go ahead. What's your question? Joe Williams, you have to unmute yourself for us to hear you. Three, two, one. We talked about energy earlier in the space. We talked about Pelosi selling her shares. Omar, would you recommend people buy shares at this price?
I mean, I think this is probably long term a multi-trillion-dollar company. There's no telling what's really going to happen in the short term, but I see an easy beat for Q3. I think it's going to be a record Q3. So bears are, loving thumping on the table of year over year decline. I don't think they're going to have that in the back half of the year, especially as Cybertruck ramps, new Model 3 ramps, and we got the new Model Y and other models coming in 2025. It seems like we might getting back to a period of them reporting record deliveries. So I think we've got an easy beat for Q3. So we don't have that as a cloud necessarily for the next 3 months. I think the earnings, we could possibly have some positive news in there as well. And then, of course, we've got the 8/8 event. So probably sentiment remains positive through 8/8. Maybe there's a little bit of a sell the news after, depending on how it goes or what they have to announce. But I mean, the way I just think about this is long term, I think this is a multi-trillion-dollar company. This is kind of one of those American institutions that emerges once in a generation, like the Apple or the Google of our time. And this is kind of their iPhone moment. They're unveiling their cybercab. So a lot of the sort of clouds are lifting. I think they're going to have obviously record Q3. They're going to have a great 8/8 event, I think, where a lot of people are going to get excited. They're going to be talking about the future. And, 12.4.2, it's a little bit, they've been taking so long to actually roll it out that I think people have kind of, forgotten about it a little bit. But at any moment, they could roll this out based on what I'm seeing with 12.4.2. It's ready to start going out to more people. So that's, I think, one of the most disruptive products in automotive, that you could just get a car and it has hands-free self-driving on city streets and highways, and that it actually works as well as it works, where you can use it in a downtown, in a suburb, on the highway, and everyone's going to be experiencing zero intervention drives, parking spot to parking spot.
Yeah.
So, yeah.
Let's get Grant's view on why he doesn't think Tesla's worth where it is today. So Grant, Omar says the stock is benefiting from some of the dark clouds lifting. He sees positive momentum until the 8/8 event, and he believes in the longer term it's a multi-trillion-dollar company.
Yeah. Just a couple comments. I mean, I hear all that. That's fine. I think that people are divided on what the sources of upside are, what the sources of downside are. I think my view is definitely in part that Elon himself has done a lot of damage to the brand. I think that there are a lot of people out there in the American public, European public, just the world, who just kind of don't like it now. And it's unfortunate in some ways. I'm not really a fan of not liking people because of their political beliefs. I try to be respectful. But
for better or worse, I think that is the reality that we're in right now. It'll be interesting to see when, a new product launches in hopefully 2025, what the response is to that, and whether or not, Tesla's challenges today are a function of these older models, or if you see a ton of enthusiasm that people would have expected not materialize because a lot of people just don't want to buy a Tesla because of Elon. I would highlight that regardless of what happens on 8/8, I mean, I guess there's a chance that it's like a world historical day, the way that Omar's talking about, but I kind of don't know that'll be the case. I think a lot of people are going to make fun of him because he's been saying this for so long, and he's increasingly, based on this failure to execute on this thing he's been saying he's a year away from for a really long time, he's opening himself up increasingly, especially with a public that's, has a portion of it hostile to him. He's opening himself up to ridicule. I think that's definitely a part of the bear case that I personally think is a risk for the company.
Omar.
Yeah, I mean, I think to really say that autonomy isn't happening, you're kind of walking around with a dunce cap these days. This is way past the point of, okay, it can't be done. We have real deployments in the real world. We have real software running in the real world. This is not a joke. And bears have to be cognizant. I understand they want to take shots at the company, and yes, they'll be looking at a way to take a shot, pulling up his old predictions. Oh, haha, he started working on this in 2016. It's 2024 now. But you're going to look like, when they pull out that New York Times newspaper clipping, man will not fly for a million years, like the week before the Wright brothers took flight. You're going to be that meme. You're going to be that tweet that people are in their self-driving cars and they look at that statement you wrote and they laugh at you. And the internet will remember forever. In the year 3000, they'll still have that tweet. And the children of the year 3000 will laugh in whatever language they're speaking at the time. And that will be what people remember.
Grant, no hands mode. No hands mode. I think we can do without hands mode from now on.
Yeah, I mean, all fair. I understand that's your view. I guess just to bring it into like a clear place, I mean, the disagreement here is whether or not this approach is going to work. I think I've been pretty skeptical of it for a period of time. Obviously, a lot of you guys think that it's around the corner and coming at some point, but it's worth highlighting that at this point, if you look at the scoreboard, the Bears are winning because it's not there. Like I feel like, Omar, you always say like, oh, it's here because I can it's L2. It's not what was promised. It doesn't seem like L4 is very close. It's just worth keeping that in mind too.
No hands.
Yeah. So, another point Grant made was that everybody hates Elon, so the company's not going to do very well. Well, they sold more electric vehicles, more BEVs than any other company on earth in the second quarter. Not bad for a company where everybody hates them because the CEO is so bad, right? Then you look at General Motors, right? Politically correct CEO. Joe Biden loves her. He smelled her hair. They sold 20,000 units. Tesla did 34,000 units a week. So in 4 days, Tesla produced more BEVs than General Motors, one of the largest auto brands in the world.
Yeah, I just want to highlight that I never said everyone hates him. It's definitely not the case that everyone hates him. I just think that a lot of people don't like him at this point. I mean, if you fast forward to 8, 9, like there's going to be a segment on the Tonight Show. There's going to be people on Twitter taking shots at him because they don't like him, and it's just an easy target at this point because he's been saying he's going to do this for a very long time, and like he's going to get made fun of. Is my point. I'm not saying universally. I'm just saying it'll be interesting to see what the fallout is. I think there's a universe where he's able to go out there and say like, no, this is really different this time, and I've spoken with regulators, and we're going to begin testing it by the end of 2025, and that will bring a lot of credibility with it. There's another universe where, I mean, if he does something similar to what he did with Tesla Bot, and it's kind of just like a song and dance, and it's like, yeah, we're doing it, he's going to get roasted. That's kind of at least where my thoughts are.
Grant, I mean, if this is your view that the Bears are winning as they push out these game-changing technologies, as millions of people start to use their self-driving technology day to day, use it for real in their real lives, and have it change the way they get around, the Bears are winning because people are going to roast him. I mean, people have roasted him since day one. People roasted him when they said they were going to make an electric Lotus Elise. They roasted him when they said they were going to do the Model S. They said, oh my God, you don't have the money to actually do a sedan. And you guys are going to take deposits? What's wrong with you? The gall of this guy. And they roasted him when they did the Model 3. And when the Model Y came out, they roasted him and they said, it's just a bigger Model 3 on stilts. That's what the Bears said. So you guys have been roasting and roasting all the way from a $30 billion market cap to a $1 trillion market cap. So go ahead and keep roasting.
Sure, but my contention isn't that we're winning because he's getting roasted. I think a good thought experiment for everyone here is to think back to 2019 when Elon got on stage and said that 1 million robo-taxis would be on the road next year. If you could, in that moment, let's say if I asked you in that moment, hey, how would you feel about the year 2024 when we're on V12 dot whatever of FSD? It can go like 200 miles. You got to sit behind the wheel with, your eyes on the road the whole time. Like, do you think that's a W for Elon and Tesla, or do you think that's a W for the Bears? The answer, you can like pivot and deflect however you like, but my honest belief is that any objective person will concede it's a W for the Bears. Like, that's not what the plan was. It is not going well, and that's why I'm saying the Bears are winning.
Well, I mean, you look at this technology, no other company has a technology like it. It's now doing all my driving. It's changed the life of many people in this space, and it's growing like crazy. So to look at it, I mean, it's like looking at SpaceX and saying, okay, sure, they got Starship to orbit, but they were supposed to be on Mars by now, right? And I think this is a lot of what it comes down to is bears are able to look at something truly incredible and say you're a failure because your ambitions are even bigger than this. Yes, you got the biggest rocket ever to space. Yes, you're launching humans into orbit, but you didn't achieve everything you set out to do. And so you're a failure. Having huge ambitions, having huge goals doesn't make you a failure. It's the reason why they've put out products that people in this space are in love with, that they're using every day, that have capabilities that are miles and miles ahead of anything else on the market. That's what the bears don't get.
Yeah, that's fine. I mean, we're obviously not going to disagree here, but there's one component to the metaphor that I do think is important. I'm not against big goals. I think if you wanted to make the comparison to SpaceX and Mars fair, you would have to have a condition of that be, if Elon had collected billions of dollars selling tickets to Mars 8 years ago, like, what would the picture look like and how would people feel about it? That's not a minor point in this whole discussion, is that he has been collecting a lot of money, pumping the stock, and enriching himself personally by making these promises that he's failed to deliver on. So, I mean, I'm not against big goals, but I'm against all the stuff I just said, and over promising to kind of achieve those things.
Well, the analogy doesn't really work because you subscribe to FSD for $99, you get to use the software for 1 month.
I'm talking about the
So
people who bought for $10,000 however long ago, Omar. Come on.
yeah, I mean, you buy for $10,000. I'm one of those people. You use the software and you get to sell it along with the car. So it's not like a ticket to Mars where nothing's being delivered. There is actually functionality that's being delivered.
That's a stretch. I mean, there
No,
were
I
a
mean it's
lot of
not a stretch.
people,
It's a real product.
and no one's been disappointed by the failure to deliver autonomy. I mean, you can make these claims, but I'm just saying, like, maybe in this space, people think that you're making sense, but in the broader public, no one believes what you're saying right now, and that's why he's kind of becoming a subject of ridicule, because people look at that behavior and they view it, just instinctively with
No
a
one
very
except the
healthy level.
millions of people a year who are buying these products and using them every
Yeah,
day.
he's actually making a good point where about the depreciation of the software and the vehicles as well. And we have Nick on the speaker board right now. Nick posted his trade-in offer yesterday. Nick, would you like to give us the numbers?
Yeah, so in 2020, I bought a Model 3 Performance for 64,000, and then Tesla's offering a trade-in right now for about, I think it was like 24,000. It's got about 40,000 miles, no accidents, full
Yeah,
self-driving.
and I posted at the top a series of listings on the used vehicle page for Tesla. The prices are less than $25,000 Model 3 prices with FSD. So somebody who's paid quick performance.
Yeah, correct.
How much was it? 60 something. So you're looking at
64,000. Yeah.
Yeah. So you're looking at more than 60% depreciation in 3 years. Obviously, this is a major topic, Omar. This is a topic that comes up a lot in my personal life when I talk to people about Tesla, as Grant is pointing out. And not only the vehicle side, but also FSD price. It was $15,000 2 years ago. And today, when you look at these used vehicle listings, whether on Tesla's own website or Car Gurus or Carvana, you're seeing that the public does not value FSD at all. I mean, there's not an option even on these websites to filter by FSD capability, like FSD software. So how do you kind of bridge that? How do you explain that people do not value this software or the vehicles as much as we're doing here by a wide margin?
Yeah, I don't really agree. I mean, I just traded in my Tesla where I had FSD that I bought on it for $7,000. And they were able to give me an additional $4,000 on my trade-in value because it had FSD on it. So, I mean, I think this is reflective of a lot of people. A lot of times people get mad about these trade-in values, but they're essentially determined by what the market's willing to pay. So if no one wants to buy your car for this price, they can't offer you, $70,000 for your car if nobody's going to buy it from them for $75,000 or $80,000. So they need to give you whatever the price is they can sell it for, minus the cost of turning it over, obviously. And that's not always the best place to sell your car. You can always sell it privately or do whatever. But the market does have some value on the option. It's several $1,000s. Your typical used car buyer who is looking for a deal isn't necessarily looking to buy, a multi-$1,000 self-driving package, especially when they can just subscribe for $99 a month. But I don't think that it's accurate to say that there's no value. It's depreciating along with the rest of the car, but at least here in the Bay Area, people do seem to be placing a few $1,000s of value on it compared to if the car doesn't have it.
It does fly in the face of Elon's promises that the price of FSD is only going up and these cars are appreciating assets. I mean, I heard that and was like, that's obviously nonsense. I'm sure there are some people who actually believed it and bought the car and bought the software. That's unfortunate. In my mind, there comes a point in everyone's life where they probably learn to stop trusting what Elon says, but I think it's going to be a journey for some people.
Well, when I bought my 2018 Model 3, it could just do basic lane keeping. And Elon said it's going to actually be able to drive itself. And now that same Model 3 is able to do complete drives, highways, city streets, parking lots. People like you said he was crazy. It's never going to happen with vision. It's running on the cars. That's why people continue to listen to him instead of people like you, because he actually delivers.
Well, I didn't say that everything that came out of his mouth is a lie, and it only takes, a sprinkle of lies to make
Okay,
someone a liar.
we're gonna go to other speakers. We have a bunch of new speakers now. I'm gonna
Wait.
go one by one. Hold on 1 second. Who's that? Kubas, what do you want?
I was just going to, before you jump into that, what exactly is Elon lying about? Because the Mars thing will be on Mars thing.
Yeah,
He said
we're gonna
at worst case scenario.
We're gonna move on from that. But before all that, at the top of your screens is a series of tweets. If you could please go and reply to those tweets, that ad revenue share supports this space. So the more people reply, the more visibility that brings to the tweets, and the more ad revenue that comes through those tweets. So if you could please do that, I would appreciate that. We're going to go to Michael. Michael, welcome. It's been a while.
Yeah, it has. I've just been busy working on an exciting project. Having to do with energy storage. So it's very interesting stuff. Yeah, I was really happy to see the good quarter for Tesla. That was very exciting. And it looks like today was a little bit of a gamma squeeze in the stock. That was also interesting to watch. I traded around it a little bit. I wanted to make a quick point about the used car valuation of FSD software and just say that it's basically two different markets. It's different markets. When you're shopping for a car on Tesla's website versus other third-party websites, it's different markets. People who are tending to shop on Tesla's website are more aware of FSD software and tend to be more interested, whereas on third-party websites, they tend to be less informed about Tesla, just want a Tesla. They're less informed about the autonomy features, and so they're less likely to value them. And that's why you might see Omar, who's trading into Tesla, and then Tesla's reselling it, getting a higher valuation for the FSD versus third-party websites.
Okay. Michael, I'm going to get back to you. So stay on board if you can, please. Let's go to Joey.
I was just going to say it's worth noting that Tesla has made concessions of transferring FSD to make up for some of those missed timelines.
James. James, going once, go ahead.
I didn't raise my hand. Well,
oh, I thought you did earlier. Okay, Alejandro.
Yes, I was going to say that I'm one of the cases where I bought it for $10,000 in 2021, and I was blown away by how the features have been improving and improving and improving over time. So in my view, I have never seen this not to like move in the right direction towards actual FSD. My only caveat is that because of all this push down the prices, like Tesla being the leader on the price of the car and lowering to get more and more cars out. Basically, people like me, for example, that we bought a full FSD and the car has depreciated. Like right now, I'm negative like probably like 12K. So it doesn't make any sense given that the car gets updated all the time. It doesn't make much sense for me to move to a newer hardware 4, which is what I really would like to have, if I cannot transfer. So that is the reason why I would, what I'm believe that it will be better if we could have several, at least, the people who already bought FSD to be able to transfer for a few more quarters. Hopefully, the trend is going to continue, and those who bought it full are not going to be a little bit penalized. Even though I'm happy that I've had it for 3 years, and I use it every day. So that's my take.
Well, you're in luck. They're doing transfer until the end of the quarter.
Yeah. FSD transfer until the end of the quarter. Eli, go ahead.
I just don't get why people don't talk about the fact that nobody else has anything close, anything similar to what FSD is. And I just finished a drive, 2 hours drive on a Chinese car, and all they have is a base lane keeping and nothing more. And I wish I had FSD, even if it's level 2, like Grant said. I just don't get it. Seriously.
Thank you. Grant.
Yeah, I think it's likely to get resolved via class action lawsuits. Those are underway. I think they're making slow progress through courts, but I think there's definitely a chance that at some point there's a payout and settlement of sorts with the people who probably aren't on the space, who are not as happy as the people on the space.
Okay. Kubas. Kubas, you have to unmute yourself for us to hear you.
Oh, hold on. Bluetooth.
Do you have a question?
Yeah, I was going to say the one thing that hasn't been brought up is the other aspects of the Tesla business that aren't part of the core business that aren't being mentioned, like the $156 million deal to New Zealand with the mega battery or the mega factory. So those parts of the business are starting to expand more. And I think that's part of the jump is people are starting to realize that aspect of the business is starting to come to fruition. And those are also things that he had spoken about. So, he's got a lot of things going on. And if things aren't meeting deadlines, it's because he's running 50 million things. That's all I got.
Okay, Miss Libby.
Oh, hi. Yeah. Hello. Thank you for letting me speak. This isn't really pertinent to what you're talking about at the moment, but when I was listening to your Tesla talk the other day, an idea popped into my head about Tesla charging places. What do you call them? Charging terminals, I suppose. Because in the UK we don't have many EV charging terminals, and then I thought, has Tesla thought about capitalizing and basically eventually owning all the charging terminals, like franchising them? Is that a possibility?
Omar?
Would they franchise out the chargers? What was the question?
Yeah, so new speakers are limited to asking questions, and the questions should start with a question word. They should have 10 words or fewer. Otherwise, people lose interest in what you're saying. So if you want people to listen to you, be succinct, efficient in your communication style.
Okay. So what occurred to me was, have Tesla considered how can I say it?
Well, why don't you stay on mute and just try to form a question in 10 words or fewer? I really don't mean to be, I don't mean to be rude, okay? But this is the way it works in this space. So think of a way, like what I recommend people do is pull up your favorite large language model, like ChatGPT, Gemini, Grok, or any like of the dozen ones, talk to them, and then say, how can I ask my question in 10 words or fewer? And that's probably the best way to do this. And then request to speak. Okay? Michael.
Yeah, it's good to be succinct, and the person who spoke should go do that exercise. But I'll just react and say I think they've already started doing that with BP, Tesla. They've sold a bunch of supercharging stations to BP, and BP is going to go and install them and operate them. So and maintain them, I guess. So that's something that they've already been thinking about. I think BP is focused on Europe, but I'm not 100%.
No, actually, BP's handling the North American market, and they've got another partner for the European market.
You're right. That's it.
Yeah, I think that's potentially a pretty exciting part of the charging
Yeah,
business.
sorry, I'm new to this. I will try and ask my questions in under 10 words, but unfortunately, some of my ideas are way too interesting to get down to that amount of words. Thanks.
Yeah, I don't think so. Troy?
I was wondering if anyone else saw something related to the self sanitization for the robotaxi between rides. I saw a tweet, but then I couldn't find it again. Wondering if anyone else caught that.
Yeah, I want to talk to Michael a little bit. Michael, how you doing?
I'm doing very well, very busy. You know, just interesting stuff in the energy storage world.
Well, let's talk other world first. So you follow closely production delivery numbers. Deliveries came in above what everyone expected. What was your guess going into it?
I updated my estimate from 425 to 435 on the final day, K for deliveries, and I had 402,000 for production. So I was off by about 2% on each of those. And it looks like the deliveries beat was mainly because of the US market, which doesn't have a lot of transparency in terms of registration data. And I saw some bears talking about, you know, oh, this is manufactured beat, it's fake numbers. Troy tracks all the registrations. There's no way he could have been this far off. Well, the reason he was that far off was because there's not very transparent data on delivery registrations for the US. So, yeah, so the US was a lot stronger than.
Okay, so US outperformed expectations, probably Model Y, due to the 0.99% financing a few weeks ago. Do you see that strength continuing into Q3? That's question number one. And then do you expect, let me ask you more open-ended, what do you expect margins, automotive margins, to do in Q2 versus Q1?
Yeah, so to the first question, I think Model Y, the financing deals definitely drove a lot of the sales in Q2. We'll see what Tesla comes up with in Q3 in terms of deals, because the Model Y is in secular decline until they do the refresh, unfortunately, which is not going to come for a while. So they're unfortunately probably, if they want to continue the Model Y kind of pace, they're going to have to do some financing deals or something, incentives. Or alternatively, which is already something that they've started doing, they can cut production and for the time being, and not offer any deals.
Well, it looks like that's what they did, right? I mean, the
They did a
production figure
mix.
came in, yeah, they did a mix, and production was pretty low in Q2. So what do you expect margins to do from Q1 to Q2, automotive specifically?
Yeah, I've seen some modelers on X put out their forecasts, and whenever I see that, I try to ask, you know, did you consider the financing deals? And broadly, the answer is usually like no. So I think there's a lot of uncertainty actually on this, and people aren't really talking about it. People are saying, oh, we're going to have a great quarter because we drew down inventory, but that's not necessarily the case, and it depends on the accounting for these financing deals. So I hope people reserve their expectations for the margin improvement given those financing deals and a lot of uncertainty around how that's accounted for and exactly how many cars it impacted. It
Yeah.
impacted a lot of cars, likely because it was offered in the US and China, which is the two largest markets. But not everyone qualified based on your credit score, and it only applied to Model Y in the US for the month of May. So there's a lot of complicating factors to consider, but I think so. It's really hard to say actually what the gross margins would be without more clarity from Tesla on how they account for it.
Yeah, you know,
And
exactly. I mean, I honestly, like for example, I was watching this is a general comment about Tesla finance. So if somebody in the audience doesn't like critical comments about Tesla, you may cover your ears. I was watching earlier this morning the conversation between Larry and Matt on Herbert's channel, which I recommend people watch it. This is years after Tesla Energy came about and started production. Tesla Energy production started back in 2017. Megapacks started several years ago. We have had the same questions around accounting, T-account accounting for Megapacks now for 2 years plus. It is ridiculous that we don't have clarity on this yet. Just insane to me that we still don't know. After having read all the 10Qs and the 10Ks and all the smartest minds about the topic with previous experience in the industry, they still don't fucking understand how is it accounted. And so many questions like this about Tesla finance. Like even though it's supposed to be simple, and I'm not questioning that they're doing things improperly or anything like that, but I think Tesla finance has room to improve when it comes to communication. And I would love to have someone come in from Tesla finance and answer some specific questions. And we can rearrange it if they want to. We can have people like Matt and Larry or others like New York CPA. Have people with accounting background ask some specific questions so we can freaking understand how they accounted for this thing. Okay, rant over. Uncover your ears, Michael.
well, we do have the opportunity to ask questions at the quarterly calls through the Say platform and at the Investor Day and the annual shareholders meeting. And some nerds should go up and step up and ask those questions. And we really should, as a community, think about what questions are actually valuable to ask and are material to the business as it is today, or as it will shape up in the near future and in the long-term future.
Grant. Can you guys hear Grant? I can't hear. Okay, Neil.
So just a quick question. I believe there has been some doubt and speculation on the Model Y refresh. I think this is a very salient question. When will it happen? And if it's one of the most best-selling vehicle in the world, its refresh must be extremely significant. So I heard some speculation that it wasn't coming. But does anyone have thoughts on when and why?
Okay, Grant.
Hey, can you hear me okay?
Yeah.
I was going to say those comments around the lack of visibility into the accounting policies just about brought a tear to my eye, Iman. That was beautiful. And applaud you for having the, openness to being critical where criticism's warranted. I think, to the points around people should ask these questions, things like that are often pretty intentional decisions from companies. I'm not saying that's like a sign of fraud, but people choose to have sufficiently nebulous accounting policies disclosed so that they have that little bit of squishiness that every company exploits in different ways. But I do think that Tesla is slightly further to the end of the spectrum in terms of that practice. So just applaud you again for being willing to critique them where appropriate.
Michael.
I think Tesla is very responsive to criticism, to questions and suggestions, especially on their product. But also,
I don't think that's true. Like, I understand. You said earlier we had the opportunity, etc. But the fact is, this isn't just me kind of pointing something out. Like we have very smart people in the community, way smarter than I am, who've been trying to figure this thing out for years. Okay. And if you follow any other company, like for example, even Rivian, if you watch their investor relations presentation, the CFO is good. She is actually anticipating investors' questions and addressing them as she walks through the presentation. She's talking about, in this graph, there's a common misconception. This is how you read the graph. Like, that's what we need.
Yeah, I agree.
If you listen to Apple's earnings calls, the CFO is stellar. Okay, we need a CFO like that, like someone who can communicate, someone who's going to anticipate questions and address them, not wait for a fucking say question. Okay, which retail investor do you think is going to vote for accounting question, for crying out loud?
That's very fair. I agree with you, Yaman, that the energy accounting is opaque, and they should do more. But I do think that they're responsive and receptive. I do agree with you also that they should be more proactive and anticipate what people are going to want. And that's also why we should, as a community, raise our kind of intelligence level and think about what questions are valuable to ask. But like, it was quarters ago where investors asked, can we get energy storage reported in the P&D report? Now it's there. It was last year, there was a question around, forecasting gross margin going forward, or maybe it was 2 years ago. I don't remember, but Zach gave a very specific answer. Unfortunately, it didn't pan out, and it missed. But they're receptive when it's brought to them. So I do agree with your other points. So it's opaque right now with energy accounting, and that in the future they should be more anticipatory of what investors want to see.
Grant.
Yeah, I would just point out that it's a free market for the level of visibility that you get into accounting and financials and the actual numbers. I think the companies that have to do a good job reporting things in a very clear and legible way, and have to do a lot of work managing investors in order to get the valuations that they want, do it. And the reality here is that Tesla is one of the most heavily retail-owned stocks in the market. I'm generalizing here, but most of the people on this call don't really care about how Megapacks are accounted for. Most people wouldn't factor that sort of thing into their decision making around whether or not they want to buy in on this stock. So Tesla doesn't really have to. I mean, that's the reality from my perspective, is it doesn't really hurt them, because at the end of the day, again, my bias is showing, but it's functionally a meme stock. They're going to get a pump out of they can get pumps out of like people in robot costumes dancing around on stage. They don't need to have very high quality financial disclosures. It doesn't matter.
All right. We now have two bears on the board, so you're not going to get as much speaking time. We're going to divvy up. It's more balanced board now. But we have JP on the board. JP is following Tesla Energy for years now. JP, go ahead.
Hey, just for clarity, you're asking about the accounting for energy, or the margins, or just how it's actually being processed on the books? I only caught like the tail end of your comment.
Yeah. So have you watched Herbert's interview of Larry and Matt today?
No, I was at work, but I spoke to Herbert and Larry quasi for a little bit yesterday.
Okay. Well,
I
there's some
think,
questions around accounting for performance obligations,
yeah.
and okay, go
Well,
ahead.
the one thing I'll just add, and I apologize for background noise. I'm walking through Manhattan right now, and it's kind of busy. The difference between the way auto gets accounted for and Megapack, I apologize if you heard me say it before. The Megapack accounting is done in favor of the customers, and so it's not opaque because Tesla is trying to hide it. It's just the most it's a balance sheet friendly way for the purchasers of the product, given the long lead time and the high capex that goes into these projects. So there's a deposit, and in order to not kind of have the exposure for the contract be on the customer's balance sheet, it's all percentage of completion accounting. So there's just milestones to delivery, and actually analytics once it's installed that they kind of then adjust the final pricing for. But it's not going to be these like large spikes where you just see huge projects pop on and pop off, because there's been like incremental payments over the process between when the final project plan gets approved to when they get delivery to when it's interconnected and commissioned. So it's in stages, and it's not the same as just going from like 100,000 cars to 1 million cars and seeing that pop up. What I
Okay,
will,
thank you.
well, just one more thing is what we'll start to see, and some people are starting to realize because the numbers are bigger. If you look at the hardware and you take the service contract, there's additional revenue, which is, I've been saying for a couple of years now, that the services related to the product, not the hardware, are going to become very meaningful over time. But we're starting to see that the hardware units, the cost and the service, there's a big profit gap that people are starting to realize is there. And we don't have a lot of transparency into the energy software services. And I think that's the question that Tesla really needs to ask for, because that's where the real juice in the company is for the next 10, 20 years. Because once the product's installed,
Okay, thank you. Michael.
Yeah, to respond to JP, I think Tesla could do a better job by disclosing the number of megawatts of energy storage projects in each milestone, and how much revenue they recognize, or the range of revenue that they recognize for different milestones, because it might be different for different customers. And other energy storage companies, for instance, Fluence, they have some of those disclosures. They would disclose, what's our deployed amount of energy storage, and what is our maintenance earnings on that. Also, what's our pipeline for deployments, and what's currently contracted, and what's currently in construction. So they do have some of these disclosures, and it's not unprecedented. And Tesla probably should do something similar.
Zero.
Hey, so while we're on the note of accounting, I was just wondering, so these 0% interest rate offers offered last quarter, it seems like the buyers, you kind of saw on Reddit and Facebook were mentioning they used FI Connect, which is basically a middleman to basically source the loans from JP Morgan, Wells Fargo, etc. I'm curious how that relates to basically Tesla's own financing and ABS. It doesn't seem like they're really doing any of that, even though they've got a load of cash on balance sheet. You'd think they do their own, financing of vehicles, seems as though they do that. It doesn't seem like they've done that for the low interest rate offers. I'm curious for anyone's view of why that is.
Okay, we'll get back to that. Neil?
Hey, so the one thing I was going to say is that ultimately the grid is like an energy efficient capture mechanism. So ultimately, when you think about Megapack, the best thing that Megapack can do is store the energy you would otherwise shed and use it for later. That I believe that is the current value proposition for Megapack. Is we've got light, we've got solar, we've got energy that it's the duck curve scenario. We don't know what to do with this shit. You can get a Megapack. Hey, that's a lot cheaper and more efficient than a peaker plant, right? Because that's what we're trying to do. So that's my opinion on the last few comments. Thank you.
Okay. Joey, do you have any thoughts on accounting for Megapacks as the energy gross margins?
Yeah, I think just to keep it short, I think it's a good point that they should have it as the critical accounting policies and estimates. That's all I really have to add.
Yeah, and I mean it's not just the Megapack accounting, it's also like FSD deferred revenue, which is bulked into a bunch of other stuff. Always confused with people. Every single quarter, people have the same questions about these accounting issues. And I'm not saying they're doing anything bad or anything like that, but like some of the bears on the board are claiming, I think those are ridiculous claims. But the fact that investors just continue to have the same questions for years now is ridiculous. Michael.
Yaman, isn't it also kind of a consideration of materiality? And that's why actually there was some delay in terms of the energy storage showing up on the production and delivery report, because it wasn't yet, it wasn't material enough to disclose at that cadence. So like as something reaches a threshold of materiality, and the thing is that the auto business is like 80, 90%, 90% of revenues, something like that. So like it's hard for things to reach the threshold of materiality for
no,
reporting.
I disagree, because it's not really the amount that we're going for. I mean, first of all, if you want to decide whether this is material or not, you should. So did you not watch the interview of Herbert between Larry and Matt?
I have it bookmarked. I haven't watched it.
So clearly, like, look at Matt's reaction, for example, and I agree with his reaction. If what Larry is saying is correct, that is a material difference. Like that would move a reasonable investor's decision on the stock today. So
agree.
And they couldn't agree between how it's accounted for. Like Matt is like, oh wow, Matt is like, if what you're saying is correct, then it is a big deal. Okay, well, we need to know if what Larry is saying correct is how Megapack performance obligations are accounted for is correct. We need to know whether that's correct or not. And we're still not 100% on it. I understand you're very passionate on this topic. I get it. You're like unmuting yourself, muting yourself, interrupting me, raising your hand, etc. Just go ahead what you're going to say. We don't need to do any of this stuff. Like we have time. These are long form spaces.
Okay, yeah. I want to say that, oh God, I lost my train of thought actually. Sorry.
Neil.
So I'd just like to say, are we clear with this, and do we all agree that Megapack's value proposition is that it captures excess energy? So excess energy must exist for Megapack to be valuable, right? Maybe that's simple for this group, but I just want us to agree on that.
Michael?
Yeah, I'd say yes. That's the essence of why it can be very valuable. But I remembered what I wanted to say. I wanted to say that the reason I haven't watched the video yet, but the reason that it's material is because this quarter we got 9.4 gigawatts reported in the production and delivery report of energy storage. So that's a lot. Sorry, 9.4 megawatts. Gigawatts, yes. So maybe this quarter they will give us more transparency, because it will probably cross the threshold of 10% of the quarter's revenue, and we might get more clarity.
Joe.
I do think this next coming fiscal year, the external auditors, which I believe is PwC, will have to pay more attention to this.
Dude, make no mistake, okay? Tesla's internal finance team knows all the answers to these things. Part B, PwC knows all the answers to these questions. 100%. There's no confusion internally about how these things are accounted for, and the auditor has no question. That's why I'm confident that Tesla is not doing any sort of like, like false accounting or anything of that sort, that grant or zero sum would claim. I have no doubt that these things are accounted for properly. Okay, what is stunning to me is that we still, for years now, don't have a CFO that will answer proactively and will make sure some of these issues that will become material are, investors are clear on these things. Like, I highly recommend people to watch Rivian's investor relations and look at the CFO. Watch the CFO's presentation. He was so good in anticipating questions from investors. Because as I was thinking, literally, I'm like, wait a second. And then she's like, the next sentence, she's on it. That's what we need. Michael?
Yeah, one thing I'll also draw attention to, this is a little tiny detail, but the earnings report is in the fourth week of the month after the quarter end, whereas usually it's in the third week on a Wednesday. And usually they do that for Q4 when there's additional disclosures that they have to do, that they have to check and double check. And so there might be some additional disclosures on things that are more material. And that could be an explanation for why they are doing it in the fourth week rather than the third week, as they have done every other quarter except Q4s.
Joey?
I disagree with that. This won't get pushed on until the 10K because that's what's audited by the external auditors.
Well, the external auditors also review the quarterly numbers. I mean, it's not like they kind of, don't do any work on the quarterly results. But so you're welcome. How are you?
Hey guys, happy pre-4th.
Happy pre-4th. You got any plans for the 4th?
No, just gonna hang with the family.
Nice. Any no fireworks?
No fireworks. We did get some sort of military news from Tesla just now.
Okay, tell us about it.
So they just introduced a military purchase program for members of the U.S. military and their spouses to get a $1,000 discount. So they can choose a Model 3, Y, S, or an X. They can get $1,000 off them or their spouse. And it's available for military veterans, retirees, active duty members, and of course their spouses. And there's no limit on the number of vehicles that they can purchase.
Nice. Awesome. Thank you very much for letting us know. Omar, what do you think about this new military discount?
Yeah, I think it's great. Great announcement for 4th of July. I mean, there's a lot of really great, Tesla supporters who are actually from military families, I've noticed. And I think it's great to be able to offer them a discount. So hopefully this will be well received and help spread the word and will help more military families get in an electric car.
Nice. Awesome. All right. This space has been going on for 2 hours, but we can keep it going for a little bit more. Sawyer, how you feeling today, man? Anything new on your end other than the military discount?
Not really. Not too much going on.
Not too much
Obviously,
going on.
everyone's talking about the stock price. That's pretty. That's pretty normal.
Yeah.
We have
Yeah,
like
it
a
is kinda
50%
crazy.
move in a few weeks, but
Yeah. But I mean, it's almost 100% now in the last 10 weeks. And the
I
stock
know.
bottom is 130 something.
Yeah, I made a little joke earlier because everyone always blames Elon when the stock falls. So I'll sort of blame Elon for the stock rising.
Yeah, maybe it's all the political tweets, right? Do you think it's going to continue from here?
I mean, Tesla's always been the stock has always been like a momentum stock, right? When it goes down, it really goes down, and when it goes up, it really goes up. And I think when there's a lot of good news, like there has been in the recent weeks with the passing of or the reapproval of Elon's comp package, the delivery numbers better than expected, the Tesla energy numbers are killing it. I imagine earnings will also be better than people were expecting. I think, and then leading that into the 8.8 robotaxi event, it could just keep running or it could not. We'll see.
Okay. Are you making any changes to your holdings at all?
No, I've owned one public stock for the last 6 years. That's Tesla, and I'll just continue to do that.
All in. All right. Zero.
Hey, yeah. So I don't know. I just wanted to go back to my last question. So just on the 0% interest financing offers. So Tesla's got all this cash on balance sheet, and they have their own basically ABS program to finance vehicles for customers. When you actually look at a lot of the buyers, it seems like they all used FI Connect, which is a middleman, which basically finances through JP Morgan, Wells Fargo, and a bunch of kind of smaller banks. I'm curious for the view on why would they do that versus using their own in-house financing ability with their ABS program. It doesn't seem like they're using that at all in Q2.
Omar?
I believe the ABS is really for vehicle leases, but to be honest with you, I'm not really immersed in the details of how they do vehicle financing. This sounds like it's getting a little into conspiratorial territory, and I just have to say, since I started covering Tesla in 2018, I saw many people waste their life going down these sort of accounting rabbit holes trying to find some fraud, and it's never really amounted to anything. It's often resulted in them just blowing up themselves with a short position. So maybe there is something there. I don't know. I haven't really looked into it, but I'm sure that it's probably not the conspiracy you're imagining it to be.
I'm not saying it's a conspiracy. I'm just confused as to why they aren't using their own in-house financing. When they look at Tesla, they want to be vertically integrated on everything. I'm just curious why.
No, you're not curious. I'm sorry. You were last night in a space basically calling that everything was fraudulent. We heard you like for 2 hours. We debunked you, and now you're here like pretending like nobody was there in that room.
Well, I'm glad you enjoyed it, Alex.
Yes, but you keep doing this. You're trying to get a rise out of us. You're not going to get it. So, move on to something else.
Just a question. It's a perfectly
just a question. Sure, whatever.
But it's just ignore my. That's a really mature response.
Well, I think a lot of automakers have massive captive financing arms. In many cases, the financing arm sometimes produces more earnings than the auto business itself during the quarter. But then you have a very different kind of business, a more sort of asset-heavy business. There's different kinds of risks. It has been advantageous to Tesla from some perspectives to just sell their cars for cash and have other banks handle financing. So they do seem to be dipping their toes more into doing their own financing, but you're right that they've traditionally been very light on vehicle financing compared to some of their legacy auto peers.
I mean, that
Neil.
was kind of my question.
Okay, Neil.
Yes, thank you. I'd just like to add, as we're talking about the stock, just look at the beta of Tesla. I think the beta is something that bears great consideration. It's 1.77, almost 2x. This stock is hella volatile. So I just want to tell that to everyone. Please look at the beta over time. It matters. It's dangerous. Thank you.
Man, every single comment you made today has been like so off topic. Where's my topic change expert? He comes up here every now and then, just tries to change the topic. You're like number 2. We can't talk about zero. I mean, we can't talk about zero stuff. I don't mind it at all. But so I was actually listening to yesterday's conversation in Adrian's space, and my takeaway is that Adrian is way more patient than I am. And my response to most of Zero's saying is immaterial. Doesn't matter. Anything less than $1 billion is immaterial. I can't believe he gave like 3 hours. Danny, there's my topic change expert. Danny, go ahead.
Yeah, I don't have a topic right now, actually.
Okay. Omar, do you want to do a space tomorrow at July 4th?
I mean, we could. Might be good for people to just enjoy the day and spend time with their family and friends and stuff. people should be giving FSD demos, of course, assuming they're sober.
Yeah. Hey, Omar, we have a question for you. Who does Omar think is the most decent Tesla bear?
Hmm.
While Omar thinks the answer to that
Gary
question.
Black.
Did you sell all these bears or what? What's the deal over there?
I think he sold at like around 200 average price. So, I mean, yeah, you know, the experts were all saying sell. It's above that price already. Often the instinct to do something can be the wrong instinct.
Yeah. All right. Just a quick announcement. So we're going to keep this space going for another hour. Okay, we're going to keep the space going for an hour, but I have to end YouTube. Okay, so YouTube has to end. We can keep X going. So if you're on YouTube, come on over to X, listen to this space. Now that means YouTube ads are going to be less today. So if you could please, if you're in the space, go scroll up to the top, reply to the tweets at the top, like, repost, reply. I'm trying to get ad revenue share from X. And, you know, I do apologize for having to do these like questions and all that stuff. It's just, you know, it is engagement farming. I mean, what do you want me to say? But it is part of the game. Don't hate the player, hate the game. And it's a way to support this space. All right, this space is free and open for everybody. And that's the way it is. So you can help by liking, reposting, and replying to the posts. Okay? All right, Grant.
Yeah, I would encourage people to sign up for Yaman's Patreon. I haven't done it yet, but you know, I was going to ask how the economics of being a creator are. I don't expect numbers, but I mean, where are you getting more from X or you know the Patreon or the YouTube? How are you
Patreon is by far. I mean, Patreon is the only material amount right now. I hope to get to a point where we don't have to ask people to leave X, whether to YouTube or Patreon, but that's going to take time. We're nowhere close to that. So, yeah, but I appreciate that, Grant. All right, Danny.
Yeah, 1 second. About Starlink, will we be able to connect to Starlink directly from the phone, or like it's for data providers like T-Mobile?
Starlink requires a dish, but the new direct-to-cell service can connect directly to a cell phone.
But what's the partnership with T-Mobile if it can do it directly?
What T-Mobile is doing with them and the deal they're going to make with other